All right, so we're back with another video on the red light, green light algorithm, for, the simple switch red light, green light algorithm for the futures market. So this is a follow-up to the video I just did on showing the win rate and the times of day that it trades, and the basically, depending on where you are in the time zones in the world or what your schedule and lifestyle goals are and all that stuff, depending on how your results might have been had you been trading the red light, green light over the last 90 days. So that video was made because I had several questions about the futures algorithm. So I wanted to make that video to answer those questions. And then we had a trader who obviously has either a lot of experience or is just really, really smart. Spider Trader had asked a question on that last video and asked the right question. So if you're looking at strategies, one of the things you need to know is what the win rate is, right? If you're looking at someone else's strategy, you want to know how well they're doing, is what is their win rate? What's the percentage of the win rate? But then the second question you have to ask is, how do they get that win rate? Is that trading every opportunity or trading every Monday? Because, how they get their win rate may not work at all for you. So definitely need to find out what gives them that win rate. What does that mean? Is that every opportunity in every stock in the portfolio and you have to juggle 20 stocks? What is that? But Spider Trader asked a question, which is also extremely important for you to ask anybody you're looking at their strategies. And that is, what is the dollar per share per win and the dollar per loss? Because if you have a 90% strategy and you're winning, $10, just for easy math, or $10 each time, 9 wins later, you're at $90 and you got 90% win rate. But then that one loss, you're losing $100. You're losing, and over the course of the year, you're bleeding out. You're not going to make any money. So very, very, very good question. Thank you, Spider Trader, for asking that question. What is the dollar per win and per loss? Because that is more important than the win rate, and that could be. You could have a 30% win rate, but if your wins are so huge that they overcome all of your losses, then it doesn't really matter if you have a 30% win rate. In the end, trading, forget about all the rules you see on YouTube, Google, all that stuff. What matters is what works. So if you're doing something against the grain and that's what works and that's what makes you money and you're happy with it, it fits everything for you and your personality and all that stuff, then it's good. So let's get into it. I want to go back. So I went back through. Here's where we started last time. I didn't add all these extra winners in here. It would be nice. We make the numbers look great, but that's not what we're here to do. So starting exactly where we were last time and ending where we were last time. And I eliminated all the overnight trades. No trades starting overnight. Just trades during the hours that most of you are awake is what I put in here, which is the the normal trading session and the trading session between 6 and 10 o'clock. So basically 8:30 to 10, if you're trading in this window, this is what the results would have been. The other thing that I did with this is if a trade started and it did not finish before the overnight hours, I didn't move the stops. I didn't follow the rules to move the stops because you're not waking up. So set it and forget it. You're a stop out or you win. Or maybe the next morning you're moving the stops. So we did that. And then on some of these trades where we would normally reverse the trade, I did that. Well, I shouldn't say reverse. We're not speed bumping them. I didn't speed bump any of these, which also recovers a lot of our losses. And I did reverse some of them where it would be an obvious reverse, where the algorithm switched to the opposite side. So we're long and then we're switching to the short side, and we did reverse that with that trade and exited there. There's a couple in here that I'll point out when we get to it. Actually, I'll try to point it out right now if I can. Where we had basically trades within a trade. So instead of having both winners count, I just took the smaller of the winner and then chose that. We'll get to it later on. So because I didn't want to, trade within a trade, it all depended when you saw it, which one you would have took. So I just took the smaller winner and added that up. The next thing that I did, and again, as I said in the last video, I would rather look at worst case scenario, because what's the point of looking at something and making, oh, it's almost a winner, we'll just call it a winner. Why would you do that to yourself? You're going to set yourself up to be a loser. So if it's almost a winner, it's a loser, right? So that's the way I did it. And then what I did with the pennies per share, because basically you can see that for me, I have everything set up where I'm trading like on the 25 cent markers. So I don't have any, I don't enter trades on this at 57 cents, 3,529.57 cents. No, I enter on the 75 or on the 50. So I did do some rounding to make all these numbers round, and I rounded to the worst side. So there's, at the end of this, there's going to be a lot of money left on the table because I rounded to the worst side instead of to the best side. I don't want this to be subjective, and I don't want this to be confirmation bias, like all over it. I want it to be just the numbers. So here's the entry that the algorithm gives me, and here's the exit. If you didn't watch the other video, go watch the other video because you'll get all the details on what I'm looking at. And I'll link it at the end of this, and there'll be a link at the bottom as well. But I basically just did the solid numbers in and out and made this very realistic and to favor the losing side of things. I wanted to, at the end of this, I wanted my number to come out lower than it would have been had I been really trading these real time. So because if my number is lower and it's still great, then trading real time, I know I'm in good shape. Because when you're trading, your numbers are going to be a little off anyway because you're going to make mistakes. The other thing I did not do when I put these dollar numbers to this is there's a lot of times where we squeeze more out of a trade, and I didn't add any of that in here. So the end result would be far better, and was far better than what you are going to see at the end of this. But I think it's a great question that Spider Trader had, and I'm sure a lot of you are thinking the same thing. Hopefully, if you're not thinking the same thing, definitely start looking at the questions that you're asking, because you need to have all this information before you decide to spend your time looking what somebody else is doing. So again, thank you. Great question. All right, so here we go. Let's get into it. So on the first day, so there's the number 2 that you see here is because once we gone halfway like we did here, we didn't hit the target. Target was right there. So once we get halfway, then we move the stop to break even plus a couple dollars based on what the algorithm is. So basically we made a couple dollars on this trade. So, and then, anytime we got pretty much right on the target, but just didn't hit it, and then we pull back to a close, we're exiting on that close because the trade is pretty much dead. So you'll see some trades that are exited, in the halfway area because we just barely touch it. Let's see if when I get to them, I'll try to point them out, but I don't want this to be like an hour-long video either. All right, so there we go. So we had $2 on that one, and I'm going to give you the tally at the end, but you can rewind and track this if you'd like as well. So $2 there, $12.75 on this one that we made. Clearly hit the target. That was a nice trade. Here we have a loss of $21.25. And then, yes, you're going to see a lot of times our losers are quite large compared to our winners, but it all works out in the end. So here we have a 32.27 win on this short. And, again, overnight, and then woke up to a nice gain there. So $2 because we made it halfway, and then it pulled back. So, and this is why we do it, because once you get the halfway marker, what I found is more often than not, money-wise, it works out financially to be smarter to take a couple dollars and get out once we've crossed the halfway marker, because sometimes the trade fails, and we would have got stopped out for a bigger loss here. So it works out financially for me with this MES ticker to do it that way. If you're using my algorithm with other tickers, you may find something different. The biggest purpose of the algorithm is to have something to trade against. So you can, modify it however it works for what you're looking at. For what I'm trading, this is what I do, because in the end, it's what makes me the most money. All right, so another winner, 14.50. And I'm going to show you the winners as well again. So we'll look at how many winners and losers we had. Then we had a loser for 42.25. Didn't quite get the halfway marker, so we rode the loser. All right, another loser, 2 in a row, which is not often. Yep, 2 in a row. Never have 3 in a row, really. I think it's been a really long time since I had 3 in a row. So, which tells me that after I have my 2 losers, I might want to boost my my share size or my contract size for the next trade, because chances are it's going to be a winner. And unfortunately, it was a tiny winner. And we got our winner. So I'm kind of just going to breeze through this slowly so you can see it. This is a $26 loss. See that separation there. And not $26 as in money. It's per share. So, or per contract. So we lost $26 per contract. Here we gained $21 per contract. So we didn't cross the 50% marker here, and that's why we didn't get out, almost. But we didn't cross it, so we're able to ride it for the win. Sometimes you cross it and it pulls back, gets you out for $2, and then it runs, but it is what it is. Like I said, in the end, I make more money by doing it that way. Here we go, we're out. And this is an example of that. We would have still been in this and could have went for the ride for the winner, but we didn't. And then same thing here, could have went for the ride for the winner, and we didn't. And right now it's still at the end of the year. Like I said, the math works out better just to take my couple bucks and not wait for this winner with the MES or the ES. All right, so then here we are. Nice. Got stopped out for $2 profit, unfortunately. Another one. And again, I'm erring to the side of the losing side of this. So on some of these trades, there are things in there where definitely I'm staying for the ride. Like right here, for example, we're crossing the 50% marker, but we're also looking at a breakdown of some consolidation. So, and then looking at, you don't need support resistance for my strategy, but if you are a really good chart reader and you have a really good handle on support resistance, then there are opportunities like this that tell me that I need to look and stay for the move to the next support level in this case. So for me, I'm staying in this trade, but if you just trade strictly off the algorithm, then it was a $2 deal. All right, $2, 27.75. So yeah, 27.75. $15.50. Look at that flush afterwards. So here we were, set it and forget it because we're going to the overnight hours. So I would have been sleeping when this trade executed and then sold off. But it would have got me out because I would have my stop in. Or my limit order, I should say. All right, got our $2 right here, pink. And then it pulled back, unfortunately, and then sold off to profit. Would have been nice. So this is a trade where probably would have got a few, would have squeezed more out of this one, most likely. But again, I didn't want to add that here because that's subjective. Who knows what you would have really did in the moment emotionally when you're looking at, maybe whatever the deal is. You may got out early, you may got, whatever it is. So I don't want this to be subjective. So we just call it what it is. $16.50. 16, 2, 20, 25, $2. $8, $8.50. 18.50. Okay, 17.50. Again, this would have you would have got filled in the overnight hours. So you would have woke up to money, money, money. $16. Yep, and again, so this right here crossed the halfway marker, so you would have got out for a couple dollars profit if this was during daytime hours. But it's overnight hours, so you're just set and forget it. You got your target here. Your stop is right here. So almost got your stopped out, and then you woke up to, oh no, and then it rallied, and you made some money. Okay, 56.25, 61.75. Hopefully this is not too fast and it stays clear on the video, and you can pause or do whatever you want to do with it. So one thing that you'll see on this video is I did discover going back through this is on the last video, I actually had some marked as losers when they were winners. There's 2 of them. So on this one, I corrected that. So right here we had a trade within a trade. I just chose the one. I didn't put the profit of the other one in there. So that'll bring the numbers down a little bit. But yeah, so I changed those losers to the winners that they were. Accidentally made that mistake on the last video, and then I went back through with a fine-tooth comb to make sure I didn't miss anything else. So we're good to go. So that will be reflected in this video as well. All right. Dun, dun, dun. And so with red light, green light, I get pretty much the same results with the sniper and the red dot. I actually get better results, just less frequency trades. So not that many examples to show you. And then sniper, I get about the same results, maybe a little bit better results on the sniper. Definitely a little more money per share on sniper. I mean, they're bigger moves, and I'm not stopping out at halfway point on that one. It's just and I'm able to take advantage of moves through 1R and all that other stuff. So we do get more dollars per share on sniper. All right, so we got $19 loss, $19.50. Yeah, so halfway point, and then it rallied. Got our $2. $2. And then we got 2 losers in a row again. I hate it when that happens. So, but on this one, it may not, depending on the student. Again, I'm not making this subjective, so we count it as a loss. A lot of times when we get big candles like this that spike off of a green that engulf all these candles before, we're not trading it. So we're avoiding this trade because a lot of times these will retrace half or all of its position. And if it takes a long time to do that, that can change the emotion of the traders around the world. And also can buy time for other events to take place, which then could drive the contract back up. So when we have we're looking at a green run up and we go from green to a giant candle like this, and it engulfs the candles before it, then a lot of times we don't trade it. Sometimes we do. It all depends what's going on. And sometimes we'll also not trade if these little dashes are inside the candle. And if we do trade, sometimes we wait to see, at least I wait to see if it retraces half or all. And then I may add, I may get in at these levels into the trade. So I may have started a position here and then started another position here so that I lower my risk so my losses wouldn't be as much. So if I was doing that here, I would have never took this trade and took that loss. And I may have taken this trade, but my loss would have been probably half of that. But again, it's subjective. So I don't want to add those subjective numbers to this. I want it to just be about the data. So definitely at the end of this, the numbers you're going to see are much worse than reality, which is the goal. Because if they're worse than reality, then that's and it's still good enough to trade, then I'm in good shape. If it's worse in reality and it's not good to trade, then I may go back and see how much worse it is in reality, and then I might decide, this doesn't work with this ticker. So, but I do like it if it's worse in reality and it's still good enough to trade. So there we go. So something to think about for you all when you're doing back tests and stuff like that is I don't look at this as, here's, X, I want to see 1 + 1 = 2. I don't do that because that invokes confirmation bias, and that kind of makes you want to skew to the long side, and that tempts you to say, well, it's almost a winner, so we'll just call it a winner. It probably would have been. Like it tempts you to do that when you have when you're looking at it expecting a result, right? You're going to put 1 + 2 and or 1 + 1 and you're expecting it to say 2, then you're going to try really hard to see 2. What I do is I say, what do I get if I put 1 + 1 on the board? What shows up? That's all I want to know. I want to know what shows up. I don't care if it's a 2. I don't care if it's a 5. I don't care what it is. I just want to know what shows up. So, and then I look at what shows up and I see how can I trade that. So if I'm expecting it to go long and, it's almost always going short and it's almost always losing, and then I'm like, oh, this doesn't work, and I put it in the garbage because I was expecting it to go, to the long side and make money. When in reality, if I just looked at it and said, well, it always ends up going to the short side when it does that, then I just trade it to the short side and I'm making money. I don't put it in the garbage, So something to think about when you're doing your back testing is trying to be more open-minded about it so that you can just say, look, it never goes up when this happens, but it does go down more than it goes up. So I can short this. And then you go back with the mindset of, if I did short this every time, what would happen? Oh, that doesn't work. But what if I did go long every time, since it didn't work when I shorted it? And then, it doesn't work enough. So then you're like, well, maybe it's a time frame. Maybe if I just avoid a certain time frame, maybe my results get improved. So, if you look at it with an open mind, you may find that what you're trying to do works really well. It just didn't work the way you thought it was going to work. So something to think about. So there we go. So there's all the stuff that we did from the last video. So you can see it. And then, yeah. All right. So let's pull up the log and show you what those numbers actually ended up being. Okay, so here we are in the log. So again, these numbers may be a little different than the numbers in the last video because I eliminated some trades because there were trades within a trade. And I also had a couple that were marked as losers that were actually winners that we fixed in this video. Any of my students know exactly when they see it. So one thing real quick is, if you have any questions that you want to know about trading, whether it be on a specific video or just algorithm in general or whatever it might be, you can put that description below in the video or that question below in the video, or you can go to in the description and go over to my site and send me an email if you don't want everybody to see your question. And then I'll, if it's a little answer I can just give you in an email, I may just give you a quick email answer and then follow up with a video, or I may wait and make a video, because I think a lot of times, especially with stuff like this where it's what's your win rate, it's better to see a video uninterrupted, going back, a good 90 days so you can see different market conditions and see the actual trades on the chart. If you're going to ask other traders out there what their win rate is, or their dollar per share and all that stuff, ask them to show it to you in a video uninterrupted over the last 90 days. 90 days gives you a really good, because a lot of stuff happens in 90 days. You have different option expirations, you have earnings, you have all kinds of stuff, seasons changing. You have all kinds of different things that happen in 90 days. So I believe 90 days is what gives a really good snapshot of the reality. So if you're asking other traders, ask them to give you a video marked up over the last 90 days to show their answer. For some traders, that might be difficult to do because they trade with their style or their strategy is very subjective and it's very instinctive and things like that. So it may be difficult for some traders to give that to you. That's why I like trading on an algorithm, because, yes, you can add some of those other things to it and improve your profits, but there's there's solid numbers there. You can do it it's data driven. So for me, I want to trade stuff that has a statistical proven probability of success. A statistical proven probability of success. So that fits my lifestyle and goals. So that's what I want to trade, and trading off an algorithm gives me that. The biggest thing is when you can trade off of something that gives you the ability to trade against something, then it makes it a lot easier, because you're trading against something and it's not, when do I get out? I think this candle looks like, maybe I should get out here because this is starting to happen. Volume's starting to dry up, so maybe I should, all that maybe. If you have tools on your charts that can give you something to trade against, it makes it a lot easier. Okay, so let's look at these numbers. So forget about all this stuff over here. This is other tickers and stuff that I'm playing with. So right here, this is in my trade log. Again, there's a link in the description. You can come over and check it out. It has my trade log with risk management tools and things like that in it. So this is on my back test blocks. So here we are. So this is actually, I just didn't change the ticker, but I'll do it just so that if anybody's looking at this and be like, that's not what you just had on your chart. There you go. Now it is. All right. So here's our wins and losses. So we can see the 2 in a rows and the singles. And this also tells me, what the win streaks look like. 7, 8, a whole bunch, stuff like that. So right now I'm coming to, I have 1, 2, 3, 4, 5, 6 in here. Some of these are 7 and 8s. I don't necessarily want to not trade the next trade just because it looks like I could be coming to an end of a streak, because this could happen. And then avoiding, one loser, I end up missing 4 winners. So it doesn't make any sense, right? But at the same time, if I'm just getting ready to start trading and my account has just enough money in it where I can't really afford to take any losses, then maybe I wait to get started until I've had 2 losers in a row. which I could be waiting a really long time. But if that's what I have to do because I can't afford to take the loss, and I need the highest probability, then maybe that's what I do. You know, it's up to you. You got to think about that for your own self. But this stuff helps me get a snapshot of those things and see that. So there's our wins and losses. And this was all the dollars and per share wins and losses that you saw on the chart. And I keep saying per share, but it's, you know, it's per contract. Trade both the equities markets, trade the futures markets, swing trading, options, all that stuff. So a lot of times I just default to shares. So here's the dollars per contract that you would have made if you trade this the last 90 days. So now we come down here, we see that we had an 84% win rate with red light, green light. Now that I fixed those two losers, with 58 winning trades and 11 losing trades. So that's a lot of trades over that 90 days. And then over here, we see that we would have made $585 and we would have lost $342. So that would have left us with $243 per contract. So what does that mean? And again, these results are way worse than what the actual results would have been. So we would have done much better than this. So here we are over here. So $243. Now with the ES, that is $50. Is what I would have made for every dollar move. So times 50. I would have made $12,150 roughly during this time. Then you got minus commissions in there and stuff like that. So, but basically, I would have started with around $1,200 win over, $12,000 win over the last 90 days. So that's with the ES. With the MES, for those of you who don't know futures, there are what they call mini contracts, and they're like the regular contracts. And the biggest difference between them is, you know, the chart is the same. The difference is what you win and lose per trade, and also how much money you have to have in your account to buy it. So the ES, you have to have $13,000 per contract. And the MES right now, you have to have, it might be more. It might be like, I don't know. I don't even look anymore. I just hit the buy buttons on it. But the MES might be around I think it's $1,350. And the ES, I believe, is $13,500. Don't quote me on that. Double check with your broker and all that stuff, and things change. And of course, as contracts expire, new rates for different times. So I don't know when you're watching this video. So anyway, so the MES usually makes me $5 per trade. I'm sorry, per dollar. $5 in my pocket for every dollar that the MES moves. So times 243. So I would have made $1,215 roughly over that 90-day period. So between $12,000 and $1,200, depending on what you're doing. And this is kind of the bummer. Like, so the commissions are the same if you trade in the ES or the MES. So commissions really eat up a lot of your account if you can't afford to trade the ES. So you kind of get punished for not having enough money in your account to trade the full contract, and you're trading the mini. You kind of get punished in a sense that you don't make as much and you pay the same in commissions. But this is what it is. So there we go. Those are the numbers. $585 per contract winning, $342 losing, putting $243 per contract in my pocket. Showed you the dollar amounts there. 84% win rate over the last 90 days. Trading only daytime hours and favoring everything to the losing side. And you know, some of the stuff I did put a bit realistic in there if it was very obvious, but I basically tried to avoid anything that would be subjective. So anyway, so there you go. Hopefully that answers a lot of your questions out there. I'm sure there's a lot more people than just Spider Trader who is thinking the same thing. Again, thank you, Spider Trader, and anybody else who has any questions on my algorithms, whether it be futures, swing trading, or day trading, put the comments below. Or run over to the site, link in the description, and send me an email, and I'll try to get back to you either in email or video. Everybody, have an awesome weekend, and we'll see you next week back on the channel.